There's definitely some elements in Q4 that are seasonal or that reflect market conditions during the quarter. So the growth was relatively broad-based. We've got some seasonal types of borrowers who build inventory in the fourth quarter and they finance that. We had borrowers who were high-grade borrowers who were choosing not to pay up in the bond market and chose to use their bank group instead. That drove extra loan growth. There was some deal-related financing for M&A transactions. That's probably a little bit more temporary because those things tend to get taken out down the road in the bond market. So I wouldn't expect $12 billion of incremental C&I loan growth every quarter, but things actually do feel pretty good, notwithstanding what you were talking about before you came to me with respect to more uncertainty in the economic environment overall.
How difficult is it going to be to shake off the fake account scandal now plaguing the bank for years, and analysts again pointing to evidence that it's still hurting you during this quarter?
Yeah, so that was about 2 years ago, and reputationally, I think it's very difficult to shake off among people who don't have a relationship with Wells Fargo, and so we're working all the time to improve the relationship with people who don't already have a relationship. You can see new account growth in the new primary checking account growth in the 1.5% range for the quarter. It's the fifth quarter that's been up. You can see home equity loans, student loans, auto loans, and small business loans up 10 to mid-teens % year over year. That's a good sign. That's evidence of customers and prospects doing more with Wells Fargo. And so I think boots on the ground in terms of actually making a difference with customers, the impact is lessening with the passage of time.
What about in terms of fines, John? Because this quarter's results included a $175 million charge for the AG settlement. Is that the last one of its kind, do you think?
Each quarter we put a pretty comprehensive list of things that are underway, still underway, even things that are new, in our 10Q and 10K. So we'll be filing our 10K probably late February, and that'll have the latest update. But in general, we're winding down the items that have been listed there for some time. It takes some time, and in some cases even a couple of years, for these things to work their way through the system. I'll point to the RMBS settlement that we had with the DOJ during 2018 that was really essentially 10 years old. So there's a long tail on some of that, but we've been very comprehensive in how we describe it so people can factor it into their analysis of the risk and the exposure that Wells Fargo may have. We try and put a number on it in terms of what's reasonably possible based on what we understand. Then, of course, we accrue for things when they become probable and estimable. So we're definitely later in the process for this. There's a much more limited number of people that we're working through. You saw this item that was settled in December that was a couple years old, and the list is getting much shorter.
Finally, John, we're in the middle of a government shutdown, now the longest in history. What do you see for growth in 2019? Shutdown uncertainty, trade uncertainty, of course, and the fact that we're coming off one of the best growth years in the last decade.
Yeah, so we're finishing up a year that I think, when it's fully written, will look like about 2.9% GDP growth in the U.S. And our best forecast right now for 2019 will be something like 2.5 to 2.6%. We've dialed back expectations a little bit for business fixed investment, but we had a big year of stimulus from the tax reform at the end of 2017 going into 18. We've got a little bit less accommodative monetary policy because of the rate increases that have already taken place and the Fed balance sheet normalization. The pace of those increases may very well slow or stop in 2019, but we still have the impact of what's already come through. And as you've just talked about, we've had slowdowns elsewhere in the world that at the margin contribute to our activity as an exporter. So 2.5, 2.6 compared to the 10 years prior to 18, you'd probably take it. It is a slowdown from 2018, but our forecast accounting for that 2.5% growth actually looks pretty good. We can certainly imagine loan growth. We'll see where markets go. Some of our business is a function of the S&P, as we're an asset manager and a wealth manager and the like. But transaction flows are very strong. The debit and credit card transactions we reported this morning are up high single-digit percentages for the year. People are spending money, and in an economy like this, where we're disproportionately consumer spending oriented and we're in full employment, it's going to take something meaningful to knock that off pace in the short term. things certainly could slow down after a temporary stimulus like the initial impact of tax reform. But things look pretty good right now, and I think it'll take something a little bit more meaningful over time to slow it down appreciably.